The World Bank slashed its global growth forecast for 2025 to 2.4%. China reports that producer deflation worsened in May, reaching its lowest point in nearly 2 years. And the Panama Canal Authority had warned that port's deal could threaten neutrality. Welcome to the Economic Bulletin. The World Bank has cut its global growth forecast for 2025 to 2.4%, down 0.4 percentage points, citing rising U.S. tariffs, trade tensions, and policy uncertainty. Global trade is now expected to grow just 1.8%, nearly half the 2024 rate. Growth in the euro area is forecast at 0.7%, while U.S. growth is downgraded to 1.4%. Global inflation is projected to remain elevated at 2.9%. Nearly 70% of economies saw downward revisions, with Mexico slashed to just 0.2%. China's forecast was held steady at 4.5%, supported by fiscal space. The bank warns that this decade may see the weakest growth in over 60 years. European Commission President Ursula von der Leyen has stated that the Commission proposed an 18th package of sanctions against Russia for its invasion of Ukraine, aimed at Moscow's energy revenues, its banks, and its military industry. The new package proposes banning transactions with Russia's Nord Stream gas pipelines, as well as banks that engage in sanctions circumvention. The Commission also proposed lowering the Group of Seven Nations price cap on Russia crude oil to $45 a barrel from $60 a barrel in a bid to cut Russia's energy revenues. Von der Leyen added that the oil price cap will be discussed at a G7 meeting this week.
Targeting the Russian banking sector by limiting its ability to raise funding and conduct transactions. We propose to transform the existing prohibition to use the SWIFT system into a full transaction ban. And we propose to apply such a transaction ban to another 22 Russian banks. We also propose to extend the transaction ban to financial operators in third countries that finance trade to Russia in circumvention of sanctions. And we also propose to sanction the Russian Direct Investment Fund, its subsidiaries, and its investment projects. In this way, an important channel for financing projects to modernize the Russian economy and strengthen its industrial base will be strictly limited. Now, the third point is that we propose further export bans worth more than 2.5 billion euros.
The Office for National Statistics has reported that pay growth in Britain slowed sharply and unemployment rose to its highest in nearly 4 years in the 3 months to April, potentially making the Bank of England less cautious about cutting interest rates further. Data showed that wage growth, excluding bonuses, slowed to 5.2%, its weakest since the 3 months. The jobless rate rose to 4.6% from 4.5%, its highest since the 3 months to May 2021. It also reveals a 6.7% increase in the minimum wage. The April data was the first since employers were hit by a £25 billion rise in social security contributions. The UK government has committed €14.2 billion of investment to build a new Sizewell C nuclear plant ahead of the spending review. The UK Treasury highlighted that Sizewell C will create 10,000 direct jobs, thousands more in firms supplying the plant, and generate enough energy to power 6 million homes. British Finance Minister Rachel Reeves added that the landmark decision would kickstart economic growth. Energy Minister said the investment was necessary to usher in a golden age of clean energy. Soaring potato prices now triple last year's levels at 120 rubles kilogram are forcing Russia's central bank to maintain 20% interest rates despite slowing overall inflation. The staple's 12% production drop has made food, comprising 40% of Russia's inflation basket, a critical policy concern. While Agriculture Minister predicts July price stabilization, the crisis has exposed economic vulnerabilities, undermining Putin's agricultural export narrative and hitting low-income households hardest, with effective inflation for the poor reaching 20% despite government interventions like tripled Egyptian potato imports. And for further analysis, we're joined from Moscow by Rami El-Qalyoubi, visiting lecturer at Higher School of Economics in Moscow. Mr. Rami, thank you so much for joining us on the Economic Bulletin. And let me first start by asking you, what were the main reasons behind the World Bank's decision to lower its global growth forecast for 2025? Mr. Rami, are you with me? Okay, we'll get back to Mr. Rami. We'll try to reconnect with him in a while. And for now, back to our news. The National Bureau of Statistics of China has revealed that producer deflation deepened to its worst level in almost 2 years in May, while consumer prices extended declines as the economy grappled with trade tensions and a prolonged housing downturn. The producer price index fell 3.3% in May from a year earlier, worse than a 2.7% decline in April and the deepest contraction in 22 months. The consumer price index dipped 0.1% last month from a year earlier. The core inflation measure, excluding volatile food and fuel prices, registered a 0.6% year-on-year rise, slightly faster than a 0.5% increase in April. China's General Administration of Customs has reported that export growth slowed in May due to ongoing uncertainty caused by escalating trade tensions with the U.S. over reciprocal tariffs. Data showed that exports in May rose 4.8% from the same period last year to $316.1 billion, as the export growth rate fell short of the 8.1% increase in April. The country's imports decreased by 3.4% year-on-year to $212.9 billion, while the trade surplus was calculated at $103.2 billion. Additionally, China's exports to the U.S. fell by 34.5%, faster than the 21% drop in April. The Cabinet Office has revealed that Japan's economy contracted less than initially estimated in the January to March quarter, with consumption figures revised upwards at a time when uncertainty surrounding U.S. tariffs is clouding the outlook. Data showed that gross domestic product shrank an annualized 0.2% in the 3 months through March 31. Quarter-on-quarter GDP growth was flat compared to an initial estimate of 0.2% contraction. Growth in capital expenditures was revised down to 1.1% quarter-on-quarter from 1.4%. External demand fell 0.8% in line with the initial forecast. Conversely, domestic demand contributed 0.8 percentage point. Bank of Japan governor has stressed anew the central bank's readiness to keep raising interest rates if underlying inflation approaches its 2% target. He highlighted that the BOJ is keeping real interest rates negative to ensure that underlying inflation reaches 2% and stabilizes around that level in a sustainable fashion. He further stated that the central bank must be mindful of the risk of hitting the zero lower bound again, or being forced to push interest rates down to zero and leaving itself with few tools to battle a recession. The Financial Times has reported that the head of the Panama Canal Authority is raising concerns that a massive $23 billion global ports deal, which includes two facilities in Panama, could threaten the waterway's neutrality. ACP administrator fears the sale involving CK Hutchison and a consortium led by MSC and BlackRock could concentrate power and give MSC an unfair advantage, undermining the canal's neutral stance. This comes amidst U.S. President Donald Trump's threats to take back the canal and his worries about Chinese influence there. Panama finds itself in the middle of the U.S.-China trade war. He also suggested the ACP might become a terminal operator itself to protect its interests. Prime Minister Nawaf Salam has blamed Lebanon's financial collapse on poor governance and impunity, noting significant security challenges. Speaking at a conference on rebuilding the nation, Salam highlighted efforts to draft fair financial legislation to restore trust in the banking sector and secure depositors' rights. He also announced funding for a social protection program and a World Bank reconstruction loan, with two upcoming international conferences planned for reconstruction and investment. And for further analysis, we're joined from Moscow by Rami El-Qalyoubi, visiting lecturer at Higher School of Economics in Moscow. Mr. Rami, thank you so much for joining us on the Economic Bulletin. And let me first start by asking you, what were the main reasons behind the World Bank's decision to lower its global growth forecast for 2025?
Actually, this year is quite difficult for many countries because on one hand we have a drop of oil prices. On the other hand, Russian-Ukrainian conflict continues and influences European economy. So there is still tension in the Middle East, and the navigation in the Red Sea is not 100% safe. All this influences global economy and trade, and as a result, might influence negatively the global economy.
Yeah, speaking of the global economy, how does the revised forecast compare to earlier projections, and what does it signal about the global economic trajectory?
Actually, the main signal is that economy might be in turmoil, actually, and the points I mentioned, such as oil prices decrease and conflicts, we should add it to them, the trade wars and unpredictable policies in economy by Trump's administration. And actually, the United States are the world's largest economy in terms of nominal GDP. So, and when American economy becomes less predictable, less stable, it influences global economy as well, because even if many people refused that, but still the United States remain the global superpower, and China still needs a few more decades to become the...
Now, sir, if you can outline the key risks that could further weigh on global growth in 2025. Mr. Rami, are you with me? Okay, we have lost connection with Mr. Rami. Thank you so much for all the information you provided us with. And now we move on to the latest developments from the United States. U.S. Commerce Secretary Howard Lutnick told reporters that trade talks with China that are taking place in London were going well and were expected to last all day. The U.S. and China are meeting for a second day of talks, hoping to secure a breakthrough over export controls for rare earths and other goods that have threatened a fresh rupture between the two superpowers. Earlier, White House economic advisor Kevin Hassett said on Monday that the U.S. was likely to agree to lift export controls on some semiconductors in return for China speeding up the delivery of rare earths. The New York Federal Reserve has reported that Americans' anxiety about the future path of inflation eased in May, as they also grew more upbeat about the state of their personal finances. The central bank survey of consumer expectations showed that the one-year inflation outlook took a substantial dip down to 3.2% and a 0.4 percentage point decrease from April. At the three-year horizon, the outlook fell 0.2 percentage points to 3%, while the five-year forecast edged down to 2.6% from 2.7%. And we're back to Mr. Rami El Qalyoubi to continue our conversation. And I was asking you, sir, if you could outline the key risks that could further weigh on the global growth in 2025.
Well, the key risk is unpredictability of the American economy under Trump's administration, as during many decades, the United States combined between being an economic superpower as well as military superpower. Now, when the United States become less predictable in terms of supporting allies politically and less predictable economically by reducing or entering into trade wars with China, so this is the main risk for.
Now, on a geographical level, which countries or regions have seen the most significant downward revisions, and why is that? We've lost connection with Mr. Rami. Thank you so much for being with us. And now we move on to the latest developments from the United States. The Energy Information Administration has reported that the United States achieved its highest level of energy production in history, reaching more than 103 quadrillion British thermal units. Natural gas accounted for about 38% of the total energy production in the U.S., while dry natural gas production stood at nearly 38 trillion cubic feet in 2024. Crude oil production contributed around 27% of the total energy produced in the country, with output rising to a record 13.2 million barrels per day. Production of natural gas plant liquids hit a record 4 trillion cubic feet in 2024, a 7% increase from the previous year. Renewable energy sources also saw notable gains. Biofuel production reached a new record at 1.4 million barrels per day. Oil prices extended gains on Tuesday, buoyed by U.S.-China trade talks and a dip in Saudi Arabian crude supply to China. Brent crude futures rose 0.3% to $67.27 a barrel. U.S. West Texas Intermediate crude was up 0.3% at 65.460.5% at $65.62. Gold prices rose on Tuesday amid ongoing geopolitical tensions, while traders closely monitor developments in trade talks between the U.S. and China. Spot gold was up 0.3% to $3,335.79 an ounce. U.S. gold futures gained 0.1% to $3,357.50. In markets, global shares showed a mixed performance during Tuesday's trading in US, Europe, and Asia. In the US, S&P rose 0.18%, Dow Jones inched up 0.02%, and Nasdaq futures increased 0.26% in Europe. UK's FTSE 100 was up 0.24%, while Germany's DAX inched down 0.77%, and CAC 40 gained 0.17%. In Asia, Shanghai Composite Index decreased 0.44%, and the Hang Seng in Hong Kong was down 0.08%, while Japan's Nikkei 205 gained 0.32%. Prime Minister Mustafa Madbouli chaired a meeting to review Egypt's 10-year health investment strategy. The meeting, attended by the Ministers of Health and Investment, focused on promoting medical tourism and boosting foreign investment. Madbouli emphasized that healthcare is a top national priority, calling it a strategic investment. He said the plan aligns with Egypt's broader economic strategy, which includes unified national investment mapping, private sector support, and digital transformation. The World Bank slashed its global growth forecast for 2025 to 2.4%. The World Bank slashed its global growth forecast for 2025 to 2.4%. China reports that producer deflation worsened in May, reaching its lowest point in nearly 2 years. And the Panama Canal Authority had warned that port's deal could threaten neutrality. This concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. Thank you for watching, and stay tuned for more updates on Q News.